Hi, my name is Larry Spiegel. I'm an attorney. I've been an attorney for over 50 years. I've helped thousands of clients set up entities over those years. And not at any great expense either, because if you'll take a look at our website, amerilawyer.com, you'll see that our fees are very reasonable. As a matter of fact, a lot of people will say, gee, I thought it was a scam. I couldn't believe the price was so low. But then when they received everything from us, which basically turns into about a 4-pound package, they're excited. And many of them call us back and say exactly what I'm saying to you now. But I want to take a few minutes right now and talk about tax savings as it relates to establishing an entity. Now, it's very important to realize that everybody's fact situation is different. Your situation is different than the next guy or gal. So you have to take this into consideration, and that's why you need to speak to us when you're setting up your company. So there's these companies out there. We have the limited liability company, we have the corporation, we have trusts, we have partnerships. There's a bewildering array of different entities out there. Which one do you choose? I'll ask a client, well, why do you want an LLC? Well, I'm getting that because my brother has one. Well, that's not a good reason to get one. There may be a very good reason, but certainly that is not a good reason. So I think that one of the things that we want to consider when we're setting up an entity is the tax savings, and how does one differ from the other? What's the difference between a corporation and an LLC? Well, did you know that the corporation is taxed according to corporate tax law? Can you see all the volumes of books that cover that? And what about the LLC? Well, the LLC is taxed according to partnership tax law, another set of books. And what is the difference between the two, and how might that affect my situation? Well, one of the first questions to ask is, what is this entity going to do? What kind of business are you in? Maybe you're not in a business, maybe it's just passive. Maybe it's just going to own stocks and bonds. So we get into looking behind the scenes of what it is it's going to do can give us a lot of guidance into exactly what we need. Now, one of the things we want to be very mindful of is that if we have an LLC and we're the sole owner, no other owners, then we have, in the eyes of the IRS, a disregarded entity. That's a crazy word. But it means that according to the IRS, they don't even consider that to be a company. And it ends up on your own personal tax return, Schedule C. Now, Schedule Cs are filled out by sole proprietors. Schedule Cs is a minefield because there's nothing that raises the audit question more frequently than sole proprietorships and Schedule C. So we want to avoid that at all costs. But I still want a LLC because I'm going to be in the real estate business, and I've heard that the LLC has got tax advantages for real estate entrepreneurs, and I would agree with that. So we have to either elect that LLC to be taxed as a corporation, which maybe we don't want to do either because we're in the real estate business. So we may have to get another member in that LLC. So then we would be considered a partnership, and we would file a separate tax return. It would not be in our personal tax return. Well, I don't have anybody else that I want to bring into this company. What can I do? Well, how about forming a corporation and letting it becoming a member with you in that LLC? Now you have your partnership and you can go from there. So there are other situations that are very fact specific. The LLC, for example, if you want that, you can elect to be taxed as an S corporation, which is very much like the LLC itself, where you have the flow through of its earnings and you're not taxed at the company level. No LLC is taxed at the company level. All the earnings flow to the owners. But the same thing is true with an S corporation. With an S corporation, there's no tax at the company level, and the earnings flow right through to the owners. And you would be surprised to find out how big some of the S corporations in the United States are. Because when the law was passed, they never put a limit on the size of the S corporation. Well, there's many, many, many huge corporations out there today that are S corporations, and the earnings flow right through to the owners. Perhaps some family started it. The other thing about tax savings, and regardless of the company, but again, one of the most important things is that it has to file its own tax return. You don't want it on your return. It's this idea of taking what would otherwise be a personal expense and turning it into a legitimate business expense and a deductible item for your corporation or LLC. People think that if they have a company and they obtain a sales tax number from the state, they can actually buy items and not pay sales tax. And that's true, as long as those items you're buying are for resale. But if they're for consumption in your business, you'll have to pay sales tax. All right, I hope this snippet has been advantageous to you. Remember, everything is very fact specific, so call us. Call us if you need anything relating to tax savings. Don't make a misstep in setting up your company. We're available at 800-603-3900. Have a great day.